Ladies and gentlemen, good day and welcome to the Sobha Ltd Q4 FY'25 results call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Adhidev Chattopadhyay. Thank you and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I'd like to welcome everyone to the Sobha Ltd call. From the management, we have with us, as always, Mr. Jagdish Nangineni, the Managing Director, and Mr. Yogesh Bansal, the Chief Financial Officer. Now I'd like to hand over the call to the management for their opening remarks. Over to you, sir. Thank you.
Thank you, Adhidev. Good evening, everyone who have joined the call today. We are pleased to connect with you today for our Q4 FY'25 financial results. We have already shared the details of our operational update of the company in the first week of April. The investor presentation based on the financial results also can be downloaded from our website. In today's call, I'll quickly take you through the operational highlights for the year and the quarter. Our CFO, Mr. Yogesh Bansal, will take you through the financials. Some of our key highlights this financial year have been our completion of rights issue of 2,000 crores, increasing our capital base, expansion into 2 new markets, which is Mumbai and Greater Noida, completion of our migration to new ERP across businesses. These are in addition to our constant efforts to improve our delivery capability at speed and scale through people and technology. With the new financial strength, clear visibility to the future in terms of new project launches, it is indeed an exciting time for us to move ahead into FY'26 and beyond. The residential demand environment seems to be steady at the moment, despite witnessing certain global political and economic uncertainties that have hit us in the past few months in this year. Our demand, as you all know, is directly correlated to the economic growth of the country and the job creation in the respective cities. As long as that is in the growth phase, it is up to us to capture the demand in the marketplace. In FY'25, we launched 8.76 million square feet over 8 projects in 4 cities. This is our highest area of launches till date. In Q4'25 alone, we launched 2 projects, Sobha Town Park in Bangalore with a total saleable area of 3.67 million square feet, and Birdsong, a plotted development project with a saleable area of 0.44 million square feet. For the next year, we continue to have a strong residential pipeline of 18.56 million square feet across 18 projects in 9 cities. We aim to launch these projects in the next 6 to 8 quarters. In this financial year alone, which is FY'26, if everything works well, we will be able to launch at least half of this pipeline. In a more optimistic scenario, we can cross the double digit in terms of million square feet launches. We expect to launch our first project in Greater Noida this quarter, which is Q1 of FY'26, and Mumbai in the 3rd quarter. Of course, these timelines are subject to unknown variables that sometimes do come up. Both these launches will take our footprint to 14 cities in the country. These launches, combined with our current inventory, gives us a good chance to achieve higher sales in FY'26. During FY'25, our total real estate sales stood at 6,277 crores, with Bangalore contributing about 58%, 20% from Gurgaon, 13% from Kerala. Sobha's share of the total sales is roughly about 79% of this, at about 4,961 crores. The average realization stood at 13,412 per square feet, which is higher by about 23% as compared to FY'24. During the quarter, the last quarter, which is Q4, our total real estate sales was at 1836 crores. We expect to achieve at least a growth of 30% plus this year, which is in FY'26, which we aimed to do in FY'25, and move towards the goal of reaching the 5-digit sales number by FY'26. On the project completions front, We completed 4.54 million square feet, 3008 units in 36 towers during the year. We expect to also increase this by at least 20% next year with 5.5 million square feet in FY'26. On the contracts, manufacturing and retail side, we concluded the year with a revenue of about 661 crores, and we expect to grow at least 10% with enhanced profitability next year. We have good visibility of order book to achieve this and hope to build the order book during the year as well. With this brief, I hand over the call to Mr. Yogesh, our Chief Financial Officer, to provide color on the financial performance, post which we shall open the floor to take questions.
Good evening, everyone, and thank you for joining us today. I am pleased to share our financial performance for fourth quarter and financial year 25. In FY'25, we have completed 2,000 crores size right issue successfully and received 1996 crore, and balance 4 crore was outstanding as on 31st March. Part of that we have received in April. So starting with cash flow, in FY'25, total operational cash flow was 6,184 crore. Real estate collection grew up by 10% as compared to last year FY'24 and contributed 89% to overall operational cash flow. In Q4, real estate collection crossed 1,500 crore, which is highest ever. As on 31st March, from all our completed and ongoing projects, we expect a 24,120 crore of future inflow from all sold plus unsold units. Against that, our cost to complete is expected to be 13,580 crore, thereby generating marginal cash flow of 10,500 crore at project level. Along with this, our forthcoming projects of 19.3 million square feet expected to be launched over next 6 to 8 quarters shall generate another 7,200 crore of marginal cash flow. We ended the year with gross debt of 1131 crore and a strong cash balance of 1761 crore. First time in history we are right now net debt negative. Our average borrowing cost have also started come down. It was 9.12% in Q4. On P&L side, for the full year, total income was at 4,163 crore, 29% growth over last year. EBITDA was 418 crore. We generated PAT of 95 crore with a margin of 2.3%. In coming year, margin are expected to improve significantly. Our current balance revenue to recognize from already sold unit as on 31st March is 15,873 crore, which is Sobha share, and we expect project level EBITDA margin of 33%. And this revenue is dependent on recognition of 17.9 million square feet of saleable area. As we ramp up our construction, this entire recognition will come over next 3 to 4 years. With this, we can now open the call for question. Once again, thank you for for your participation.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Concall from HDFC Securities. Please go ahead.
Yeah, hi Jagdish. So just wanted to clarify, did I hear it correctly that you said we will cross 10,000 crores of sales in FY'26?
Good evening, Parikshit. So what our plan is, what I have guided is at least 30 to 35% what we have done in FY'25 and move towards the 5-digit number in FY'26. If it's possible in FY'26, nothing like it, but at least this is what, considering the new launches that we have and some of the inventory that we already have with us. So I think at least we should be able to do 30 to 35% this year. And if we can move towards 10,000 this year itself, nothing like it. It also depends on the timing of the new launches that we plan to do. And if that works well, then surely we should aim towards that.
The second question was on the launches. So if you can help us understand at least the near-term launches which are in the significant stages of approval, at least in Q1 and Q2. So that will be helpful.
Yeah, in Q1 we have the launches from our first launch in Greater Noida, which is in Sector 36. And we have Marina 1, which we have in the 4 towers, that's about 920,000 square feet. And the Greater Noida launch is about 0.7 million square feet. These two would be large ones. And if one launch in Bangalore, which is of about 0.6 million square feet, is also possible. We are hoping that it can work, but if there is a miss, then that will go into the first few weeks of July. So that's in Q1. Q2, again, we have a small launch in Gurgaon, which is a commercial one where we are launching serviced apartments. And a small project in Bangalore again, which is about 0.5 million square feet. And another project in Bangalore, which is about 0.3 million square feet. And if everything works well again, there is one more project in Trivandrum, which we can do at 0.25. So both first 2 quarters together, I think we should be looking at about 3 to 3.5 million square feet.
And this cumulative GDV will be approximately about 5,000, 6,000 crores, and these will be all single phase launches?
Yeah, I mean, we would launch all of them, and again, like any other project, we would do the phasing based on the pace of sale. But yeah, both put together, it should be around 5,000 crores overall.
And just one last question, Jagdish, on this business development. So we have spent close to about 945 crores in FY'25 versus 382 crores which was spent in FY'24. And I also see that Noida now the area has increased to 3 million square feet. So if you can help us understand how much has been the new business development, both outright and JDA in FY'25, and particularly in Noida, why has this land bank increased and what has been the addition there?
Right. We have in this overall business development that we have done, we have added about close to 10.5 million square feet last year, which would have an average, even at an average value of about 15,000, should be the overall value should be about 15,000 crores. In that, a mix of JD and outright. Overall, again, our share of the whole revenue in that again will be about again 80-20.
Okay, so and Noida, there's increase in Noida area?
Yeah, so apart from the first plot that we have taken in Greater Noida in the authority auction, we have done one more small transaction in Greater Noida, which is a joint development. The details of which we will be able to further give details in a month or so.
Okay. And this 15,000 which you have taken over, so if you can give a broad split, I mean, is this include your own land or own land will be over and above this in FY'25 which you have cleaned up? And also geographically, how is this 15,000 divided?
Yes, I mean, of course, it is own land consolidation is a small bit in this. In addition, what I have said is, which is 10.7 million square feet, is actually it is entirely new developable area that we can target. Some small part of it will be coming from our existing land bank, where we have incrementally invested to make it contiguous and also add to the current land mass.
And geographical breakup?
Geographical breakup, again, about roughly 50% of that is in NCR which is in both Gurgaon and Noida, and about roughly 40% is in Bangalore, and remaining 10% is in Chennai, Pune, and Kerala.
Okay. Sure, Jagdish. Thank you and wish you the best.
Thank you, Parikshit.
Thank you very much. The next question is from the line of Dhruvesh Sanghavi from Prospero Tree Asset Management LLP. Please go ahead. Mr. Dhruvesh, please go ahead.
Am I audible? Hello.
Yes, sir, you're audible.
Yeah. So first, congratulations for the 5-digit guidance. I mean, very pleasant to hear that you are reiterating that condition. Secondly, just want to understand, Yogesh, I think mentioned about 33% margin. If you can expand what you are saying, because maybe I missed out, or was he saying that in the next 8 quarters we will have our reported margin go towards 30 plus?
Dhruvesh, we even in the investor presentation we have given that we have roughly about 16,000 crores of revenue to be recognized, right? So this revenue that is to be recognized has an embedded project level EBITDA margin of 33%. So that's what Yogesh has been saying. And this revenue we would recognize as the projects complete, of course, and which I think is going to happen in the next 3 to 4 years. And as and when and it would be an increasing function in terms of the margin getting recognized, because there is still a small mix of lower margin projects in which need to be recognized, which will gradually phase out in the next year or so, and a higher margin would kick in the future, which is currently what we have. This 33% is the average of all the entire lot of the unrecognized revenue.
The line for the current participant is disconnected. We'll move to the next participant. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much, and good luck for this year. My first question is continuance of this EBITDA guidance of 33% on project level. How much of overhead should we build in from here? And do you think this is conservative because you also have a lot of backward integration? How should one think about the benefits of backward integration into your margins versus the sales velocity?
Yeah. Thank you, Puneet. Puneet, the guidance or let's say estimate of overheads is little tougher to sort of get to, because if you include sales and marketing costs as part of the overheads, that's a variable year on year, right? Because as we do better in sales in subsequent years, the cost of sales and marketing increases, and which needs to be recognized on a P&L in that year itself. So hence the overhead significantly increases. But otherwise, if you take that out, then it should be reasonably constant. That should be about 7 to 8%. But only the other overheads, non-sales and marketing. And there would be a small percentage of interest also that would be embedded. So if you just deduct these after the project level, if you're asking what are the other costs that need to be taken into account, that these three would be the ones, which is standard corporate overheads, second sales and marketing for that year, and of course the interest that is embedded in the projects.
Understood. And, a couple of quarters back, you talked about, margins improving dramatically. We haven't seen that in the second half. Is that something one should expect into FY'26, or is it still some while away?
I think the margin should start improving this financial year, definitely, because it's a fairly clear that whatever the margin loss that we have encountered in the contractual space, that's largely completed, and hence now majority of the entire of the revenue and corresponding margins will be from real estate. And even here, like I was saying, that some of there are few projects which are few of them mainly non-Bangalore projects where we had incurred significant increase in cost. There will be some kind of low margin projects these are, which we will be recognizing in the next year or so. Apart from those, rest of the projects seem to be very well within a good margin on the margin front. Hence, I think FY'26 will have a mix of those, and hence it might drag a bit. But otherwise, from going forward, that should not be the case anymore.
Understood. And your 33% EBITDA margin guidance is a blend of those low margin projects and the high margin projects.
Yes, yes. And that's why I was saying that it is going to be an increasing function. So hopefully it should even become, we might start with little lower and end with much higher.
Right. And versus 33, which is more for historical projects, what are the margin expectations you have from your current sales?
Current sales, again, the EBITDA margin should be now in the new ones should be closer to 40% is what our sense is. And if it's our own land in some of the places, that also will add to those margins. But if it's in a typical joint development and recent acquisitions, margin should be in the range between again closer towards 40%.
Okay, so that's helpful. And lastly, if you can talk a bit about your new financial strength with lots of cash, how aggressive should we see you going and getting new business development, or would you like to keep some cash on the sidelines?
Yeah, that's a good question. We have, in fact, in the anticipation of this, and we had already started, and you have seen some of the investments that we have done in CR and in some places in Bangalore also. We have done these investments, and I think now the focus for us in terms of new business development would be again more concentrated towards Bangalore, NCR, maybe a little bit in Hyderabad and Mumbai. So, and it's going to be highly opportunistic. The kind of opportunities that we can really pursue now is slightly wider. I don't have a clear guidance in terms of how much we're going to deploy, but the fact is that we are in a good position to capture any good opportunity that can come by. And that's what we have done in our entry into Greater Noida and a little bit investments that we are doing, and that current opportunities that we are pursuing in Mumbai are all based on that. Having said that, we already do have a good pipeline in terms of new launches, and you have seen that even from our existing land bank, there is enough for us to sort of launch and monetize those. And there also we have some kind of cash outflow to monetize and take it to the project level. So hence, so our usage of cash will be in three buckets. One is for pursuing opportunities in these focused cities. Second is to get our existing land bank into monetizable state, and third is some of the if we have to require to invest in any of the other land banks, future land banks, where some investment is required to actually monetize them, not necessarily develop into a project, but monetize them, there also we would invest them.
That's helpful. And lastly, if you can talk a bit about your Gurugram strategy. Last year was a little weak. Any thoughts on how you would want to accelerate that part of the market?
Yes. Last year, although Gurgaon has contributed close to 20% of our sale, and we did the highest ever sale there, we definitely expected to do much better. We have been discussing over the calls in the previous quarters as how we are going to turn it back again. So this year also we think that we can achieve much better than what we have done, almost hopefully at least 60 to 70% higher than what we did this year. So things have been progressing well since last few months in terms of sales in Gurgaon. So my view is that with the progress of the project and with the understanding of the people, of the customers in terms of value that we create, so there is an increased interest and enhanced sales that we are seeing, and we have a new set of projects also lined up, 2 to 3 of them. So that will also generate much higher interest, and hence and those projects that we have designed, and we are quite mindful of the ticket sizes that has been probably one of the issues that we faced in the last year. So considering the slight good pickup and good interest being seen, consistent interest being seen in the current projects, and the new pipeline that's coming in, both should contribute well for Gurgaon. And we fundamentally believe that Gurgaon has very good potential. We have established a good reputation. We have a good operational presence there. So we'll continue to invest there, and we are putting our best efforts to make sure that scales up from an overall medium to long term point of view also.
That's very good. Just lastly, on the plan to monetize Hoskote and Hosur, what should be the timelines for that?
Hosur, I think I have mentioned it in my previous call. Hosur, one of the land parcels that we have which we plan to monetize through a plotted development, the change of land use has already come, and hence we are in the design and the approvals phase right now. That's about 40 acres. Remaining parcels of the land in Hosur, we have clearly identified that they will be monetized. In addition to that, the Hoskote land we also is in design and approvals phase. We are hopeful that should be launched in the next 12 months time horizon, if not earlier.
Understood. That's it. Thank you so much, and all the best.
Thank you, Puneet.
Thank you very much. The next question is from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Thanks for the opportunity. So firstly, if I look at the guidance of 30-35% growth, that's probably similar to where we guided for last year, right? So how would this year be different versus last year? Is it on the launch timelines, the confidence that we have on launches, but maybe a slight change in demand environment? So what's going to drive this and this 10,000 crore number that you are eyeing for?
Yes, Pritesh. The launch timelines visibility for us is slightly better this year, no doubt about it. And second, the launches are also more diversified in the sense they are in many more cities, and with varied customer sets and also ticket sizes. So hence the diversity in the kind of new launches that we are getting in should definitely help us in achieving a much better number than what we have done last year. Last year, if you remember, the launches that we did were slightly concentrated in larger ticket sizes, and that did not, although we launched it early in the year, it did not really help us add to the whole sale value. In fact, the 50% of the last year's sale is also from the new launches, but some of those launches have happened little later in the year. A phased approach of launches and clear visibility should definitely help. Number one. Number two is we are starting out with a reasonable inventory across cities, so that should also help us in achieving our number. So it's more to do with a steady demand environment and a diversified launches that we are doing, and hopefully timely launches as well.
Sure. And since you mentioned about ticket size, have we also course corrected there in terms of every market we are present in, that what kind of right ticket size and right pricing is needed for those projects? And should we as analysts should be fairly confident about your pricing strategy and product strategy for launches going ahead?
Yeah, I mean, like I mentioned earlier as well, it's not that we have deliberately aimed for a certain ticket sizes. Those launches that we have done last year were all of them came up in a certain time frame, which was coincidental. But otherwise, our core bread and butter business has always been a 3-bedroom, 2, 3, and 4-bedroom apartments, and that continues to be the case even in the future, and particularly large projects. We have a good mix of products. That's one. Second is from a pricing point of view. Also, we would continue to adapt the same methodology which we have been doing, which is essentially at least one, protecting margins, and also second is making sure that the project sales are done at least there is we complete the project sales much ahead in terms of from the project life cycle or completion life cycle. So both put together, the higher inventory that we have will definitely contribute to the higher sale is what my point is.
Sure. Second, on the launches, so 8 to 9 million square feet is what you are aiming to launch this year. If you can provide a breakup across markets, I mean, you in general gave a breakup for first half launches, but broader full year number, how should these launches be across the markets?
From a launches point of view, I think roughly about 40% plus will be in NCR, which is in Noida and Greater Noida and Gurgaon, and roughly about 15% is in Bangalore, and about 10% is in Chennai, 5% in Mumbai, and rest of the locations carry the remaining.
Sure. And NCR, I mean, Noida will launch both the projects, both the projects that we have this year?
Yes, we hope to launch both the projects. First one being in this quarter, hopefully, and the remaining, the other one, we aim to do it in this calendar year. If not this calendar year, definitely this financial year.
Got it. And just one last, I see Gurgaon, we have added 10-acre land, which wasn't there last time. I'm sure it's new acquired land. I just want to know the location of that land, where it's located is in Gurgaon.
Sorry, Pritesh, we have not done any new land acquisition, but if there is anything like that, let me go through that and then come back to you. That might be from our earlier project, which is in International City, which we are planning to develop as floors. That might be the case, but let me have a look at it and then come back to you again.
Maybe, yeah. Okay. Thanks. That's it from my side, and all the best.
Thank you, Pritesh.
Thank you very much. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, Jagdish, and good afternoon, team. My first question is on Gurugram. So, sir, Gurugram, are we restricting ourselves mostly in Dwarka Expressway, or do you have projects that is coming up, say, in other parts of Gurugram? And also, our strategy seems to be very different from other developers in the last 3-4 years that we have seen, whereas all the developers that we track or we have seen are trying to sell everything on launches at least what they're saying. Whereas we seem to use a different strategy. We try to sell over the project life cycles. So my first question is this on Gurgaon.
Yeah. Thank you, Biplab. So on the project portfolio in Gurgaon, we have currently 3 projects, which is one is Aranya, which is in sector 80. In fact, it's not on the expressway, it's on main NH8. Second one is in Altus, which is again mixed-use apartment project. It's in sector 106. That's on the expressway. See, the current ongoing projects, the mix we have changed it from pure Dwarka Expressway, which was earlier the case. But now we have these 2. And adding to those will be 2 other projects at least. One is in sector 63, which is on the other side of highway, which is sort of extension of Golf Course Road. So that will be a new location for us. And in addition to that, we have a couple of other projects which are again in Dwarka Expressway. So the range of projects that we have is location is reasonably diversified now. That's one. Second is to your point of the sales strategy or the pace at which people are selling in Gurgaon, other players versus us. I mean, the difference is clearly very stark. But the way we price it and the way we give out our payment plans, all of it is in the interest of making sure that the cash flow of the project is intact. We have been present in Gurgaon for last now more than close to 14 years. One of the things that we have seen is any investor, short-term investor-led bookings there is a possibility that it might lead to cash flow issues in case of any steadiness or slowdown in the market. That we would definitely like to avoid, and hence due to that nature, and second is our pricing being slightly premium. Both these take out a large chunk of the market, which is pure investor market. So hence you might see that the volumes are lower, but largely we have also seen that our sales cycle and the project cycle are similar, which means that we do sell out the project prior to the completion of the project. So hence that should not be an issue from a project cash flow and project profitability point of view. But yes, I mean, we do hope that we can increase the pace of sale, and we are taking some learnings from what has been done last year and improving upon those. And if those also work, then we should see a pickup in our sales also.
Okay, that's good, sir. And my second is more of a clarification needed. In the slide number 17, the area in ongoing and upcoming for Gurugram and Noida, I'm just trying to decipher it. So are you saying in Gurugram, in the ongoing portion, you have only 0.02 million square feet of SBA? I mean, I'm just trying to interpret this as in ongoing and forthcoming for Gurugram and Greater Noida.
Greater Noida is a new location for us. So this is...
So that's the 3.1, sir?
Yeah, that's the 3.1 that's forthcoming. So we don't have anything which is ongoing or completed. For Gurgaon ongoing, which is this essentially ongoing would... I think this is a mistake, but if we will correct
it.
Okay.
And that's fine, sir. And on the forthcoming in the Gurugram, that is 4.08. So are you saying that the main projects you that just now mentioned that is coming this quarter and two projects in sector 63 and Dwarka, this together would be 4.08 million square feet forthcoming in Gurgaon.
Yes, in Gurgaon, there are 4 projects which are in forthcoming. One is the 63, Sector 63. Second is one mixed development that we are planning to do in Sector 106. And third is we have a commercial project which we plan to sell part of it, retain the retail portion of it. And the fourth is Sector 99, where we have another project. So there are 4 projects in that. And in addition to that, we have a small portion in, we have our own land in International City, which is a plotted development that we are debating between doing a plotted development and sell, or we can do a floors and do the project. So that also, once we decide, then that also will come up to this.
So FY'26-27, we would see significant supply coming from NCR. Am I right, sir?
Yes, in 25-26 itself, we can see, like I said in to an earlier question, about 45% of the new launches that we are going to do are from NCR.
Okay, sir. Great. And all the best for FY'26.
Thank you. Thank you, Biplab.
Thank you very much. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon. Thanks for taking my question. So 2 questions from my side. First, wanted to get your views on the demand scenario. Would be great if you could expand on that, and especially across various ticket sizes or segments. Now, I think about 45% of our sales is coming from ticket sizes 3 crore and above. So what is the demand, across these various ticket sizes? And second is on the pricing front. I mean, how do we see the pricing scenario? I think everyone in the industry has seen very sharp price increase, partly due to product mix. Of our 23% increase in realizations in FY'25, what would have been the like-to-like or organic price increase? And how do we see like-to-like price increase in FY'26? Thank you.
Good questions, Parvez. To start with, from a demand point of view, so each we have 3 large markets. Of course, our launches are in many more cities this time. So are Bangalore, NCR, and Kerala. All 3 are slightly different. Bangalore is largely end user driven, and there the demand seems to be at least steady from the leading indicators, which is from inquiries and from the site visits point of view. So, but however, of course, any macro events that do occur which are negative in nature typically impact negatively into the customer sentiment, and one of the first things one tends to do is to put a brake on the discretionary spending. So which was temporarily we could see in the first 2 months of this financial year, but otherwise it's back to being steady. So I think from demand standpoint in Bangalore, it seems to be very much consistent with what we have seen last year. Second, in the same market, from a pricing point of view, like-to-like pricing, probably we might not increase the price as we had done in the last couple of years. So hence we can see a steady pricing environment. Going forward, probably in the next few years, you would probably see inflation-led price increases, and that's largely in Bangalore. Similar would be the case in NCR as well, although we are seeing from a demand point of view there as well, Gurgaon seems to be reasonably steady. From Kerala, which has a different set of customers, the kind of demand is mainly driven from the NRIs, and there seems to be good continue to see interest in our projects, and the pricing there also has been steady, but new launches, what we are doing are slightly higher than what we had done earlier, and even in those, there seems to be a good interest from the customers.
Sure. Thanks and all the best for future.
Thank you, Parvez.
Thank you very much. The next question is from the line of Girish Chaudhary from Avendus Spark. Please go ahead.
Hi, Jagdish. Yeah. So, firstly, on operating cash flow, I just wanted to check how do you see the trajectory for fiscal 26? This year we saw around, from operating cash flow point of view, around 1,174 crores, which was some 7 to 8% growth. So, yeah.
No, I think from an operating cash flow also, it should be similar or better. In fact, it should be. We should aim to achieve at least 10% growth on that operating cash flow. We should try to aim, because on the back of sales that we have done in the previous years, the construction.
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्ड वर ठेवला आहे. कृपया लाइन पर रहा. आप जिस व्यक्ति से बात कर रहे हैं उन्होंने आपके कॉल को होल्ड पर रखा है. कृपया लाइन पर बने रहिए. The person you are speaking with has put your call on hold. Please stay on the line. आपण ज्या व्यक्तीशी बोलत आहात.
The line for the management seems to have disconnected.
Saisha, we are still here.
Oh, okay, sir. Okay, sir,
I think
continue.
there was from the line of Girish. Probably we can take the next question.
Okay, sir. The next question is from the line of Kunal Lakhan from CLSA Limited. Please go ahead.
Hi. Thanks for taking my question. Just on an earlier question, just trying to read between the lines here. You said that the Gurgaon demand is reasonably steady. Would you say it's reasonably steady currently versus, say, euphoric last year? Or how would you like to elaborate that?
Yeah, I mean, last few years, the demand has been euphoric in Gurgaon, in other cities as well, Kunal. But actually, the characteristics roughly remain the same, which is now we are in a environment where there is pricing increase, right? Is largely stabilized. Initially it was a cost-led increase, then there is a demand-led increase, and now the pricing seems to have stabilized, and and also since the supply also has caught up, the price increases, I would say, would largely be inflationary going forward, at least in the visible year or so. Considering that the demand environment, specifically in cities like Gurgaon, there is a significant chunk that comes from investors as well, and that the long-term investors and end users demand will be steady, but a part of short-term investors might be impacted with this nature. Otherwise, which actually what matters to us or to any developer would be a customer who is not leveraging and playing on the price increases, but actually would like to keep the investment that one does. So from that sense, the steadiness of the demand should continue.
Sure. Just on that, right? I understand speculative demand may just being down, but say even the end user demand, right, with say the 20%, 25% growth in prices that we saw annually in the previous years, with that now slowing down, and with then obviously the FOMO effect for end users reducing. Would you see the slowdown in the end user demand also? Are you sensing that in the footfalls or inquiries?
Yeah, like I said, the leading indicators, which is our inquiries, visits to our project sites, those seem to be quite steady. So I have not seen any big changes there, and hence the confidence that the demand seems to be quite steady right now.
Sure, sure. On the Bangalore market, right, the approval issues that we had in the last year due to the e-Khata issue, is it fully resolved or there is still some deadlock there?
In the e-Khata is a evolving phenomena. As we progress with the time, the adaptation to the new system is continuing to take place both for inside the government and for the end users or developers. So unless there are some exceptional cases in the sense use cases, things seem to be getting resolved much faster, and hence that part of one small area of Khata related timelines should get better.
So on the approval side of the department, I think, is that normalized there or is it still?
Yeah, during the approvals, Kunal, Khata is also a part of the process. So that side, there were certain delays experienced by all the developers. Those I think would slowly come down. But from the other side, which largely has been, unless there are any specific issues or any changes in the people at the helm of the affairs in terms of the departments. Other than that, rest of the procedure and the norms are completely the same, and hence I don't foresee major challenges there.
Sure. And on the Bangalore market, right, you said that the demand remains steady, but considering the uncertainty on the U.S. policy making regarding, say, the H-1B visas and even the recent repatriation tax, and a fair bit of demand comes from the workforce abroad. Do you sense any reluctance there in terms of, again, customer behavior, in terms of committing to long term or committing to purchases?
Any such macro or issues that come up which impact the sentiment of the customer, or there's kind of uncertainty that gets created, would definitely impact. But it's in cities like Bangalore, for us the NRI demand or is good, but it's a small percentage. So from that point of view, it's not visible yet for us right now. But if as more clarity comes through and people would make their choice to sort of go ahead with their purchases or how to plan their own life. So as that progresses, probably we'll get to see the visibility. But as of now, I think it's a little early for us to comment on that.
Understood. And lastly, in terms of scaling up from the current scale of 6,500 crores of sales to 10,000 crores that we aim for, right? Now, in terms of our organization capability, are we ready in terms of licensing, getting approvals, sales, or even execution for that matter?
Yeah, no, very good question, which is very pertinent for us, particularly because we are a backward integrated company. So our ability to mobilize resources is very critical for us to scale up. So in that regard, we have done a few changes in our organization from a structure point of view, which will enable both these factors which you have just mentioned, which is one, ability to launch projects in a quicker manner and probably more timely manner, right? That's one. And secondly, there are huge challenges with respect to project execution in terms of mobilizing resources and ability for us to scale in multiple cities. So this small organization structure changes and continuous effort to to explore both from a technology and people training and people capability point of view. It's a continuous exercise, but specifically understanding the kind of scale that we are looking at, we have made conscious restructuring and redesignations of key people inside the organization, and that I'm hoping that with that we have initiated the changes that are required to address this challenge.
Understood. One last question. I don't know whether you gave out this number. What will be the spend on new land purchases in FY'26?
Well, we should do similar, or again, it's not a very clear number, because what we are going to do in terms of any new deals that can come up, those calls we will take little later. But from a current visibility point of view, there would be certain committed land payouts, and those will be similar or slightly higher than what we are. But largely from the operational cash flow that we will generate, we should try to achieve that. And even if we have to spend a little bit more, then I think we have enough capital with us to take us through that.
Sure. Thanks, Jagdish, and all the best.
Thank you, Kunal.
Thank you very much. As there are no further questions from the participants, I now hand the conference over to management for closing comments.
Thank you everyone for patiently listening to us, and I hope we have answered most of the questions that have been posed. In case of any further clarifications, please do reach out to us. We'll be happy to provide far more data and also clarity towards any of the further questions. Overall, we think that we are in a very probably the best phase right now as a company. We are for the first time sitting on a negative debt. For the first time, we have a clear visibility of large scale of launches that we can pursue. We have for the first time have a big set of inventory that we already have to begin with, and for the first time we are clearly seeing the power of the diversification that we have we had set on long time back, and hence we have a lot of launches across these cities. So this is a very exciting time for the company, and also very challenging one in a good manner. It shows that we should be able to showcase our strength of our model of backward integration, and able to achieve both our operational and financial objectives going forward. I thank everyone who have been covering us and also listening to our side of the story for the last few years. And thank you very much, and wish you the best.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.